Now, nobody is expecting Reserve Bank of India to change at least on the interest rate front. So, where do you think Reserve Bank of India what could be different or will be different from their last policy?
Not very different, honestly. Our sense is that they remain on hold. At the same time, they possibly maintain a bit of a balanced stance. Our sense is that in the February policy, the statement was quite balanced. Though if when subsequently we got to see the minutes of the meeting, we found it somewhat more hawkish than what we had expected. Our sense is that if I compare the statement, the February statement with this particular statement, it can be somewhat similar. Overall, the headline inflation number has come down quite a bit. On the food inflation side, we have got quite a bit of relief. On the other hand, the other worry which the RBI had been flagging for a while, that is the global prices, oil prices, etc. That particular block hasn't really offered us any kind of relief as of now. That is quite stubborn at a similar level. So overall, our sense is that they remain cautious and they maintain that particular stance. Formally, they maintain the neutral stance so that it gives them enough flexibility, but they remain on hold. But where we think is very, it's a very, even though they remain cautious and they continue to highlight some of the inflation risks, our sense is that they are not going to move rates anytime soon, pretty clearly not anytime in 2018.
Morning, and that's quite a stark contrast from what analysts on the street have been observing, because most of the market participants are believing and trying to price in already that the RBI is going to move and move aggressively, especially in the backdrop of the crude prices having a touch and go moment with 70 and then coming back from that the RBI is definitely going to hike rates, if not in the first half, in the second half of the year for sure.
No, we don't belong to that particular camp. Our take here is pretty clear. We think overall inflation number for 2018-19 financial year will eventually remain quite benign. Our average inflation for 2018-19 financial year is 4.6%, and of which the first half will be averaging somewhere around 4.9%. And the second half will be averaging at pretty low 4.2%. Now, monetary policy being forward-looking, if sees inflation at around 4.2% or anywhere in the low 4% handle, we think there is no case for rate hike at this juncture. And if you see the growth recovery, the pace of recovery in growth, there is still a lot of uncertainty around that, even though growth numbers can be significantly higher in H1. I think they are exaggerated to an extent because of the extremely low base, given that it's comparing the year-on-year growth is on the back of the post-demonetization months. So overall, even if growth numbers are in the high 7% handle, we don't see a case for rate hike in 2018 at all. Our sense is that in the next few prints, you might see a bit of uptick in the CPI numbers. We see the peak sometime in the current quarter at around 5.5%, but that should not be seen as a sign of worry, because eventually the trajectory will be moving down and the average 4.6% is pretty benign.